Hey traders, and welcome back to Uplift Markets. The S&P 500 and Nasdaq are showing signs of strength, but the true question is, what's really driving this shift? Well, today we'll break down whether the market is gearing up for a summer rally and how the Trump tariffs may be silently impacting today's volatility. So, without further ado, let's get started. Before we dive in, make sure you subscribe to the channel and join our free Uplift Markets newsletter, straight link in the description, in order to get trade ideas and AI-powered trade setups before they hit YouTube. Now, let's start with something that's flying under the radar. The Trump tariffs are still impacting today's markets. And according to Pohl College of Management, there are three major ways that these tariffs are impacting the stock performance. Reason number one is that there's been an increased input costs. Companies are now having to pay more for imported goods. That obviously hits their margins, and in some cases, they're forced to pass the costs on to consumers, slowing down the demand and growth. And we recently saw this with a GDP contraction, right? So it's just a matter of time before we see something similar in the Q2 results if we see some type of change within the tariffs. Reason number two is that as other countries respond with their own tariffs, that obviously hurts American exporters, especially in the manufacturing and agriculture, by reducing the foreign demand. Now, what is the result? Well, we have a more jittery, headline-driven market with rapid sector rotations and fewer, clearer trends. Now let's zoom in on the technical picture. Let's begin with the S&P 500, or the SPY. We are above the 50-day EMA, which is a strong bullish sign. We are holding above the swing high anchored VWAP from those highs that we formed, and we are above the majority of the other indicators. Just to give you guys some context so you guys don't get confused, here's like the little map that we have, right? So the red line represents the 9 EMA. The little light blue is a 15, the yellow is a 50, and the black is a 200 EMA, right? So obviously we're above the 50, and that's a clear sign, like I said. But something that I really like is that we are above all of the indicators. We're above the 9, the 15, the 50, and the 200, showing that there's bullish sentiment and the bullish trend is still continuing. Also, what I really liked was that gap up that we had on Friday, May 9th, to where we opened on Monday, May 12th, above those key areas of resistance that were just impeding us to, get up higher, right? So I really like this little gap up that we had. And something very important to note here is that we're also above the swing high anchored VWAP, right? We gapped up and we're well above it. And you guys may be asking, well, are we still in a bullish market? And obviously it's yes, right? We haven't broken the trend, it hasn't been invalidated. We haven't gone below pretty much any of the indicators. We're still above the 50 and 200 EMA. And we actually, pulled back exactly towards the 15 EMA. And it's pretty, nice to know that as in general, when we have a trend and we have deeper corrections, the 15 EMA acts as that support on those deeper moves, right? But now we regained it and we're starting to get above now again the 9 EMA, this red line. So it's looking absolutely amazing. It's looking bullish, but this obviously depends on the overall macro news and the sentiment of investors. And I firmly believe we can achieve the all-time highs again of around 612 and even go above that, above and beyond, blue sky setup, right? So that's looking pretty good. We can also shift our attention towards the triple Q, which is pretty much the Nasdaq, and it's looking the same as the SPY. And I really like this one a little bit more because it's more tech heavy, right? And it's still looking bullish. We are well above all of the major indicators, like I said, all of these, right? But what I really like is that we also had that deeper correction and it got caught at the 15 EMA. And we pulled back again today Friday, May 30th. And we noted here that even though we pulled back, buyers came in aggressively. You guys noticed this lower wick right here. It shows that, sellers came in, but buyers, they bid up the price, right? We found support exactly at the 15 EMA right here around $5.10, $11 level here on the triple Qs. And yeah, the trade hasn't been invalidated. Still looking bullish. Firmly believe we can achieve the all-time highs of 541 and even go beyond that, right? So the trend is not invalidated. We're above all these key areas of support, and it's just looking good from here, right? Obviously, all depends on the overall macro sentiment and the news. And also, as a bonus, I'll let you guys to know to watch the semiconductors and growth names, right? Everything, for example, like NVIDIA, AMD, Palantir, all these other tech leaders are, they're still holding strong, especially NVIDIA after earnings, and Palantir, which I'll get in another video expanding on that. But, it's telling us that there's this risk appetite. It's returning in the markets. Now investors are now looking back into these, growth names, which shows obviously more confidence in the overall markets, right? So something key to note here is, what should you guys be looking out into the next week? Well, we should be looking for the volume, right? You want to see rising volume on breakouts, and we don't want to see any weak rallies regardless of what you're trading. And rotation as well. Obviously, if the financial and the small caps and the industrials start catching bids, then it confirms a broader strength. Now, if you want more analysis like these, feel free to subscribe to our YouTube channel. And if you found this video helpful, smash the like button, comment with your thoughts, and subscribe to our Uplift Markets newsletter to get early access to those trade setups powered by AI, and you get stock breakdowns. So, as always, thanks for watching, stay uplifted, and don't let the market whip you guys out. I'll see you guys on the next one.